people spend their entire lives working for money without ever realizing that money was supposed to be working for them. They wake up early, they rush, they stress, they chase numbers on a screen, hoping that one day, somewhere in the future, those numbers will finally mean freedom. But instead, something strange happens. The more they earn, the more complicated life becomes. The bigger the paycheck, the heavier the pressure. And deep down, a quiet question starts to grow. If I'm doing everything right, why do I still feel stuck? Stay here, because what you're about to hear might challenge everything you thought you knew about money. This is not about hustle. This is not about getting lucky. This is not about chasing the next big thing. This is about something far more powerful, something so simple that most people overlook it their entire lives. In this audiobook, Index Funds Explained, the Lazy Millionaire System, you will discover a different path, a quieter path, a calmer path, a path where discipline replaces stress, where systems replace effort, and where time becomes your greatest ally instead of your greatest enemy. You'll learn why the wealthiest people don't chase returns, they build systems. Why consistency beats intensity every single time. Why the real game of money is not about how much you make, but how long your money can survive without you. This audiobook is educational, not financial advice. But it is something more important than advice. It is a shift, a mental reset. And once you see this clearly, you cannot unsee it. Here is the truth most people never hear. If your income depends on your presence, your freedom has a ceiling. Let that sit with you, because everything you're about to learn builds on that one idea. We will walk through this journey step by step, chapter by chapter. You will understand what index funds really are without complexity. You will learn why simplicity often outperforms intelligence. You will discover the lazy millionaire system and why it is anything but lazy. You will see how ordinary people with ordinary incomes quietly build extraordinary wealth, not through talent, but through patience. And before we go any further, make a quiet agreement with yourself. If something you hear resonates, don't ignore it. If a sentence hits deeper than expected, remember it. And if clarity replaces confusion, even for a moment, consider leaving a like, not for us, but as a signal to yourself that you're ready to think differently. Because this is not just information. This is awareness, and awareness changes direction. Now, before we talk about index funds, before we talk about investing, before we talk about wealth, we need to confront something uncomfortable, because most people are not losing money because they lack opportunity. They are losing because they are playing the wrong game, and that game was taught to them. Chapter 1. The Invisible Trap. From a young age, you were given a formula: work hard, get a good job, earn more, save what you can, repeat. It sounds responsible, it sounds logical, it sounds safe. But there's a hidden flaw in that formula, a flaw that almost nobody questions. Because it's so deeply accepted, the formula teaches you how to earn, but never how to build. It trains you to survive, but never to design. And the result? You become efficient at effort, but dependent on it. This is why two people can earn the same income and live completely different financial lives. One feels constant pressure, the other feels quiet control. Not because of intelligence, not because of luck, but because of structure. As described in the foundation of financial thinking in DEA, most people are taught to chase income instead of building systems that manage it. And that single misunderstanding changes everything, because income is temporary, but systems can last. Think about your current relationship with money. Do you control it, or do you react to it? Do you tell your money where to go, or do you wait to see what's left? Most people don't manage money. They respond to it emotionally. They check their balance and feel relief or anxiety. They spend based on mood, not intention. They save whatever remains, if anything remains. That's not control. That's reaction. And reaction creates instability. Here's the shift. Money should not feel emotional. Money should feel mechanical, calm, predictable, directed, like a system that runs whether you're paying attention or not. Because the moment money depends on your constant attention, it becomes a burden. Now let's go deeper. Why do most people never escape this trap? Because effort feels productive. Working more feels like progress. Earning more feels like winning. But here's the uncomfortable truth. More effort does not guarantee more freedom. In fact, it often does the opposite. Because if your lifestyle grows with your income, you stay in the same position, just at a higher level. This is the cycle. Earn more, spend more, stress more, repeat. And years pass, decades pass, and one day you look back and realize you were always moving, but never arriving. So the question becomes, if effort alone isn't enough, what is? The answer is not more complexity. It's not trading more. It's not predicting markets. It's not chasing trends. The answer is simpler than that, almost too simple, and that's why most people ignore it. It's called owning the market instead of trying to beat it. This is where index funds enter the story, but before we reveal how they work, you need to understand something deeper, because this next realization changes how you see everything. The wealthy don't focus on being right. They focus on being consistent. And consistency is built on systems, not emotions, not guesses, not timing, systems. So ask yourself one question before we move forward. What if the goal was never to outsmart the market, but to align with it? Because if that's true, then everything you've been taught about investing might need to be rewritten. And in the next chapter, we begin that rewrite. Dear viewer, we now have over 150 videos on our channel. That's a huge number, and we want to thank you, our viewers and subscribers, so much for that. You inspire us to create great videos every time and choose the best topics for our audiobooks. If you haven't subscribed yet, now is the perfect time to do so. We have big plans for this channel. Thank you. Chapter 2, The Game You Were Never Shown. There's a silent misunderstanding that keeps millions of people stuck for decades. They believe investing is about intelligence, about timing, about knowing something others don't. But that belief alone becomes the barrier, because it turns investing into a performance instead of a process. Let's strip it down. Imagine two people. One spends hours every week analyzing stocks, watching charts, reading news, reacting to every movement. The other sets up a simple system, contributes regularly, and walks away. 10 years pass. Who wins? Logic says the harder worker should. But reality often tells a different story. Because markets don't reward effort, they reward alignment. And this is where the idea of index funds becomes powerful. Not because they are exciting, not because they promise fast results, but because they remove the need to be right. They remove the pressure to predict. They remove the emotional roller coaster that traps most investors. And instead, they allow you to participate quietly, consistently, without interference. Now let's understand what an index fund really is. At its core, an index fund is simple. It doesn't try to pick winners. It doesn't try to avoid losers. It simply follows the market. It holds a collection of companies, sometimes hundreds, sometimes thousands, bundled together into one investment. Instead of betting on one company, you own a piece of many. Instead of guessing who will win, you accept that over time, the system itself grows. Think about that. You are no longer trying to be smarter than the market. You are choosing to become part of it. And that shift removes one of the biggest risks in investing: your own behavior. Because most people don't lose money because the market fails. They lose because they react. They panic when things drop. They chase when things rise. They buy based on emotion and sell based on fear. And over time, those small emotional decisions compound into large losses. But when you remove the need to react, you remove the biggest weakness, yourself. That's why this system is often misunderstood. People hear index funds and think it sounds boring, too simple, too slow. But here's the truth most people miss. Simplicity scales. Complexity collapses. The more complicated your strategy becomes, the more fragile it becomes, because it depends on perfect execution, perfect timing, perfect judgment, and perfection is not sustainable, but a simple system, done consistently over a long period of time, becomes unstoppable. This is not theory. This is pattern. Across decades, across countries, across generations, and yet most people ignore it. Why? Because it doesn't feel exciting. It doesn't give instant rewards. It doesn't trigger the same emotional highs as quick wins. But remember this: fast money feels good. Slow money builds freedom. Let's go deeper. When you invest in an index fund, you are investing in growth itself. Businesses expand, innovation happens, economies evolve, and over time, that progress reflects in the market. You're not betting on a single outcome. You're aligning with a system that has historically moved forward, not in a straight line, but in a direction. And that direction matters more than the short-term noise. This is where patience becomes power, because most people measure progress daily, weekly, monthly, and when they don't see immediate results, they doubt the process. But wealth doesn't grow like a straight line. It grows like a curve, slow at first, almost invisible, then gradually, then suddenly. But only for those who stay, only for those who don't interrupt the process. This is why discipline matters more than knowledge, because knowing what to do is easy. Doing it consistently, without interference, without emotion, without doubt, that's the challenge. And that's where most people break. They start strong. They feel motivated. They invest for a few months. Then something happens. The market drops, fear appears, doubt grows, and they stop. Or worse, they reverse. And that one decision costs them years, not because the system failed, but because they stepped out of it. So here's a question for you. What if success in investing had less to do with intelligence and more to do with behavior? Because if that's true, then the real skill is not picking the right investment. It's staying in the system long enough for it to work. And that's exactly what index funds are designed to support. They reduce decisions. They reduce noise. They reduce the need to react. And in doing so, they increase your chances of consistency. Now pause for a moment. Think about your current habits. How often do you react emotionally to money? How often do you feel pressure to do something, to act, to change, to adjust? Because doing nothing feels uncomfortable. But sometimes doing nothing is the strategy, not out of ignorance, but out of discipline. Because constant action is not always progress. Sometimes it's interference. And the people who build real wealth understand this. They don't chase movement. They design systems that run without them, quietly, predictably, over time. And this is where the idea of the lazy millionaire begins to make sense. Not lazy in effort, but efficient in design. Not passive in thinking, but intentional in structure. They build once and allow time to do the heavy lifting. Because time, when combined with consistency, becomes the most powerful force in finance. But here's the catch. Time only works for you if you stay in the game. And in the next chapter, we're going to uncover why most people quit too early and how that one mistake quietly destroys their future. Chapter 3. The Silent Killer of Wealth. There is a mistake so small, so common, that most people don't even realize they're making it. And yet, over time, it destroys more wealth than bad investments ever could. It's not lack of knowledge. It's not lack of income. It's not even bad timing. It's impatience. Quiet, subtle, justified impatience. The kind that whispers, "This isn't working fast enough." The kind that convinces you to stop right before things begin to work. And that's where most journeys end. Not in failure, but in interruption. Because the system only works if you allow it to continue. Think about this. Every powerful process in life requires time. Muscle doesn't grow in a day. Skills don't develop overnight. Trust isn't built instantly. And yet, when it comes to money, people expect acceleration, immediate results, visible proof, and when they don't see it, they walk away. But here's the truth that changes everything. Wealth is not built in moments of intensity. It is built in seasons of consistency. Index funds are not magic. They are not shortcuts. They are not a trick. They are a mirror of the market itself. And the market moves with time, not with urgency, not with emotion, time. So when you invest in an index fund, you're not just investing money, you are investing patience. You are making an agreement with time itself. And most people break that agreement. Let's go deeper. Imagine planting a tree. You water it, you take care of it. But after a few weeks, nothing visible happens. No fruit, no shade, no reward. So you dig it up, you move it, you try something else, and again, nothing happens. So you repeat the cycle over and over. Years pass, and you wonder why you have no trees, while someone else who planted once and simply stayed consistent now sits in the shade of something they built years ago. That is investing. That is the difference. Not intelligence, not opportunity. Consistency. As emphasized in the foundational mindset of long-term growth, real financial progress comes from disciplined, steady actions, not constant changes. Now here's where it gets uncomfortable, because patience sounds easy until emotions get involved. The market drops. Suddenly, everything feels different. Logic disappears. Fear takes over. You start questioning everything. Was this a mistake? Should I pull out before it gets worse? And in that moment, you face the real test, not knowledge, not strategy, but emotional control. Because the system is designed to work over time, but your emotions are designed for survival. And survival doesn't like uncertainty. It doesn't like waiting. It doesn't like loss, even temporary loss. So it pushes you to act, to escape discomfort. But here's the danger. When you react to short-term pain, you sacrifice long-term gain. This is why most people fail, not because they chose the wrong system, but because they didn't stay long enough for the system to prove itself. And this is also why the lazy millionaire concept feels so counterintuitive, because it requires you to do something most people can't do. Sit still, stay consistent, ignore noise, trust the process. That's not laziness. That's discipline at a higher level. It's easy to act. It's hard to wait. Now pause for a moment. Ask yourself honestly, how do I react when things don't go as expected? Do you stay steady or do you adjust immediately? Because that answer reveals more about your financial future than any investment choice ever will. Let's take it even further. The market will test you, not once, not twice, but repeatedly. There will be drops, crashes, uncertainty, negative headlines. People around you will panic. Some will exit completely. Others will try to time their way out. And in those moments, you will feel pressure to do something, to act, to protect. But here's the paradox. The moments that feel the most dangerous are often the most important to stay consistent. Because those are the moments where future growth is quietly built. Not visibly, not immediately, but structurally. And the people who understand this, who internalize this, who trust this, become the ones who benefit later. While everyone else is reacting, they are remaining. While everyone else is leaving, they are staying. And over time, that difference compounds. Now let's connect this back to your life. Because this isn't just about investing. It's about behavior. The same impatience that ruins investments ruins goals, ruins habits, ruins progress. People start, then stop, start again, then stop again, always searching for something faster, something easier, something more exciting. But the truth is, progress is often quiet, boring, repetitive, and that's why it works. Because most people won't stay long enough to see it. So here's the shift. Instead of asking, how fast can this work? Start asking, how long can I stay consistent? Because that question leads to a completely different outcome. And that's what this system is built for. Not speed, not excitement, but endurance. And in the next chapter, we're going to break down the exact mechanics behind this system, how money actually grows over time, and why the slow beginning is the most important part of the entire journey. Chapter 4, the power that hides in time. There is a force so powerful, so consistent, that once you truly understand it, you stop chasing shortcuts forever. But here's the problem. Most people encounter it every day and still underestimate it because it doesn't look impressive at the beginning. It looks slow, almost invisible, and because of that, they ignore it. The force is simple, compounding. Now don't rush past that word because it sounds technical, but it's actually one of the simplest and most misunderstood ideas in finance. Compounding is what happens when your money begins to grow. And then that growth begins to grow itself, not just once, but over and over, like a snowball rolling downhill. At first, it barely moves. Then slowly, it gains size, then momentum, and eventually, it becomes something powerful. But here's the part most people miss. The beginning always looks insignificant. Let's bring this into something real. Imagine you invest a small amount regularly, not a huge sum, not something dramatic. just something consistent. At first, the results feel underwhelming. Your account barely changes. It feels like nothing is happening. And this is where most people stop, because they mistake slow growth for no growth. But what they don't see is what's happening beneath the surface. Each contribution, each small increase, each moment of patience is stacking quietly, invisibly, and then one day, something shifts. The growth starts to accelerate, not because you changed anything, but because time finally had enough space to do its job. This is the curve, the one almost nobody stays long enough to experience. As highlighted in the principle of long-term discipline, small, consistent actions over time create results that feel disproportionate to the effort. Now pause for a second. Think about how many times you've started something and stopped before seeing real results, not because it didn't work, but because it didn't work fast enough. That's the same mistake people make with money. They interrupt compounding, they reset the process, and every reset costs them years. Because compounding doesn't reward starting, it rewards staying. Let's go deeper. Compounding is not just about money, it's about behavior. Your habits compound, your decisions compound, your focus compounds. Every small action you repeat either builds momentum or breaks it. So when you invest consistently, you're not just building wealth, you're building identity. You become someone who follows through, someone who stays, someone who doesn't react to every fluctuation. And that identity is more valuable than any single investment because it carries into every area of your life. Now here's something most people don't realize. The hardest phase of compounding is not the middle. It's not the end. It's the beginning. Because the beginning requires belief without evidence. You have to trust the process before it shows you results. And that's uncomfortable because we are trained to expect feedback, to see progress, to feel rewarded quickly. But compounding delays that reward, and only those who understand that delay benefit from it. So ask yourself, am I willing to stay consistent even when it feels like nothing is happening? Because that question determines everything. Let's make it even clearer. Two people start investing. Same amount, same system, same timeline. One stays consistent. The other stops after a year because it feels slow. 10 years later, their outcomes are completely different, not because of intelligence, not because of opportunity, but because one respected time and the other interrupted it. This is why the lazy millionaire system works, not because it's effortless, but because it removes unnecessary actions. It removes the urge to constantly change direction. It simplifies decisions so you can focus on consistency, because every extra decision is an opportunity to make a mistake, and most mistakes come from emotion. So the system protects you from yourself. Now think about that. The most powerful strategy is the one that reduces your chances of interference, that keeps you steady, that keeps you aligned, that keeps you moving forward, even when you feel uncertain. And that's what index funds allow. They don't promise perfection, they don't promise speed, but they provide structure, and structure creates stability. Stability creates consistency. Consistency creates compounding, and compounding creates results. But here's the final piece of this chapter, the one that most people overlook. Compounding rewards patience, but it punishes hesitation. Every year you delay, you don't just lose time, you lose momentum. Because time is not neutral. It either works for you or against you. And the longer you wait to begin, the more you have to catch up. So the real question is not, how much should I invest? The real question is, when do I start? Because the earlier you begin, the less effort you need later. And the later you begin, the harder it becomes to reach the same outcome. This is not pressure. This is clarity. Because once you understand this, you stop waiting. You stop overthinking. You stop searching for the perfect moment. And you begin, even if it's small, even if it feels insignificant. Because small beginnings are how compounding starts. And in the next chapter, we're going to uncover one of the biggest myths in investing. The idea that you need a lot of money to begin, because that belief has stopped more people than anything else. We'd also like to remind you that we have a private members community on our channel. All members can vote on the topic of the next video, have priority in the comments section, and, most importantly, gain access to exclusive videos and lessons covering the most relevant topics and information specific to this month. Thank you. Let's keep moving forward. Chapter 5. The Lie That Keeps You Waiting. There is a sentence that sounds responsible, that sounds logical, that sounds reasonable, but quietly keeps millions of people stuck for years. I'll start investing when I have more money. It feels valid, it feels smart, but it's one of the most expensive beliefs you can hold because it delays the one thing that matters most. Starting. Let's be honest. Most people don't avoid investing because they don't understand it. They avoid it because they believe they're not ready. Not enough income, not enough savings, not enough knowledge. So they wait. And while they wait, time keeps moving, opportunities keep passing, and the compounding clock never starts. Here's the truth that changes everything. You don't need a lot of money to start. You need a system that allows you to stay. Let that sink in, because this completely flips the narrative. The goal is not to begin big. The goal is to begin early, because small amounts, when combined with time, become powerful. But large amounts, without time, struggle to catch up. This is where most people misunderstand wealth. They focus on size instead of duration. They ask, how much can I invest? Instead of asking, how long can I stay consistent? And that single shift changes everything. Let's go deeper. Imagine two people again. One starts investing small amounts early. The other waits years, then invests larger amounts later. Who wins? Most assume the second person, but often it's the first, because time multiplies consistency, far more than size multiplies effort. This is why the beginning matters so much, not because of the money, but because of the habit. Because once you start, you create momentum, you build identity, you become someone who invests, and that identity removes resistance. As reinforced in the principle of disciplined daily action, change begins the moment you stop waiting and take ownership of small, consistent steps. Now pause. Ask yourself honestly, what am I really waiting for? More money? More knowledge? More certainty? Because here's the uncomfortable truth. That perfect moment doesn't exist. There will always be uncertainty. There will always be risk. There will always be reasons to delay. And if you wait for everything to align, you will never begin. So instead of waiting for clarity, you create it through action. You start small, you stay consistent, you learn as you go. And over time, confidence replaces hesitation. Now let's talk about fear, because beneath this delay, there's often something deeper. Fear of losing money, fear of making mistakes, fear of doing something wrong, and that fear is valid. But here's the shift. Doing nothing is also a decision, and it has consequences. When you don't invest, you're not avoiding risk. You're choosing a different kind of risk. The risk of stagnation, the risk of inflation slowly reducing your purchasing power, the risk of depending entirely on active income. So the question is not, is there risk? The question is, which risk am I choosing? Because every path carries uncertainty, but only one path allows growth. Now think about how simple the first step can be. Not dramatic, not overwhelming, just consistent. A small amount, regularly, automatically. No need to overthink, no need to analyze endlessly, just action. Because action breaks hesitation, and hesitation is what keeps most people stuck. Let's connect this back to the lazy millionaire system. It's not about avoiding effort. It's about focusing effort where it matters. Setting up a system once so you don't have to rely on motivation every day, because motivation is unreliable. It fades. It fluctuates. But systems, they stay. They run in the background. They remove friction. And most importantly, they remove excuses. Now imagine this. You set up a simple system, a fixed amount invested regularly into an index fund. No constant decisions, no emotional reactions, just consistency, month after month, year after year. At first, it feels small, almost irrelevant. But then, it becomes routine, then identity, then momentum, and one day, you look back and realize something has changed. Not overnight, not dramatically, but steadily, quietly, powerfully. And that's when it clicks. Wealth was never about one big move. It was about many small ones done consistently. So here's your reflection. If I removed the need for perfection, would I finally start? Because perfection is the enemy of progress. And progress is what builds everything. In the next chapter, we're going to go even deeper. We'll break down why simplicity wins, why trying to outsmart the market often backfires, and why the smartest investors in the world choose to do less, not more. Chapter 6. Why doing less wins more. There is a strange truth about money. The harder most people try, the worse their results become. Not because effort is bad, but because misdirected effort creates chaos. Think about how most people approach investing. They research constantly. They follow trends. They check prices daily. They react to news, opinions, predictions. They jump in, jump out, switch strategies, chase momentum. It feels productive. It feels intelligent. It feels like control. But in reality, it's noise, and noise leads to mistakes. Here's the shift that changes everything. The more decisions you make, the more chances you have to be wrong. Now let that land, because most people believe success comes from doing more analysis, more action, more adjustments. But the highest level investors, the ones who build real wealth, often do the opposite. They reduce decisions, they simplify actions, they remove unnecessary complexity. And by doing less, they achieve more. This is where index funds stand apart. They don't require constant attention. They don't depend on predictions. They don't ask you to be right. They ask you to stay consistent. And consistency is easier when there are fewer decisions to make. Now let's go deeper. Why does trying to beat the market often fail? Because it assumes something unrealistic, that you can consistently predict what will happen next. Not once, not twice, but over and over, across years, across changing conditions, across unpredictable events, and even professionals with teams, data, and experience struggle to do this consistently. So what makes an individual think they can? This is not criticism, this is clarity. Because once you understand this, you stop chasing control and start building alignment. As highlighted in the concept of system-based thinking, real financial stability comes from structure, not constant reaction. Now imagine two paths again. Path 1, constant decisions, frequent changes, emotional reactions, high effort, high stress. Path 2, simple system, minimal decisions, consistent contributions, low stress, steady progress. Which one is sustainable? Which one can you follow for years without burnout, without confusion, without doubt? Because sustainability is the real advantage, not intensity, not bursts of motivation, but the ability to continue without interruption. And that's where simplicity becomes powerful, not because it's easy, but because it's repeatable. Now here's something most people don't realize. Complex strategies often feel safer because they create the illusion of control. You feel like you're doing something, like you're managing risk, like you're staying ahead, but often that complexity hides fragility because the more moving parts you have, the more things can go wrong, and the more you rely on your own judgment, the more you expose yourself to error. But a simple system removes that burden. It doesn't require constant input. It doesn't demand perfect timing. It allows you to step back and let the structure do its job. Now pause. Think about your life outside of money. Where do you overcomplicate things? Where do you feel the need to constantly adjust instead of staying consistent? Because this pattern repeats everywhere, in habits, in goals, in relationships. We often believe that more effort equals more results, but in many cases, clarity beats effort, structure beats intensity, consistency beats bursts. And that's exactly what this system represents. It's not about being passive, it's about being intentional. You choose your system once, you define your path, and then you follow it without second-guessing every step, without reacting to every distraction, without chasing every new idea. Because chasing creates instability, and instability breaks momentum. Now let's talk about something deeper, control. Because most people don't struggle with investing, they struggle with letting go of the need to predict, letting go of the need to act constantly, letting go of the belief that more effort equals better outcomes. And that's uncomfortable because control feels safe. But here's the paradox. The more you try to control the market, the less control you actually have. Because the market doesn't respond to your effort. It doesn't reward your attention. It moves based on forces far beyond individual influence. So instead of trying to control it, you align with it. You participate. You stay consistent. And over time, you benefit from its direction. This is not giving up control. This is choosing the right form of control. Control over your behavior. Control over your consistency. Control over your decisions. And that kind of control is sustainable. Now imagine this. You remove unnecessary decisions. You stop checking constantly. You stop reacting emotionally. You focus only on what matters. Consistency, time, structure. Suddenly, investing feels different, calmer, clearer, more predictable. And that calm is where real progress happens. Because stress leads to mistakes. Emotion leads to poor decisions. But clarity leads to consistency. And consistency builds everything. So here's your reflection. Am I trying to outwork the system, or align with it, because one path leads to exhaustion, the other leads to stability. And stability is what allows compounding to do its job. In the next chapter, we're going to uncover the emotional traps that pull people out of the system, the moments where most people fail, and how to recognize them before they cost you years. Chapter 7. The Emotional Traps That Break the System. There comes a moment in every journey, a quiet moment, where logic fades and emotion takes over, not because you're weak, not because you don't understand, but because you're human. And the system you're building requires you to act in ways that feel unnatural. Because investing is not just a financial game, it's an emotional one. And most people don't lose because of bad strategies. They lose because of predictable reactions. Let's expose them, because once you see them clearly, they lose their power. The first trap is fear. It arrives suddenly. The market drops, numbers turn red, headlines become negative. People around you start talking about losses, about crashes, about uncertainty. And in that moment, your mind shifts from long-term thinking to short-term survival. Should I get out? What if it gets worse? What if I lose everything? These questions feel urgent, important, rational, but they are driven by fear, and fear has one goal: to protect you from pain, even if that protection costs you your future. Because here's the truth: the market doesn't punish fear immediately, it punishes it later. When you exit during fear, you don't just avoid temporary loss. You remove yourself from future recovery, and recovery is where the real gains happen. Now, let's move to the second trap: greed. It feels different, lighter, exciting. The market is rising. Everything looks positive. People are talking about easy gains. You start thinking, maybe I should invest more. Maybe I should try something faster. Maybe I'm missing out. And suddenly, the calm system you built starts to feel too slow, too simple, too boring. So you adjust, you chase, you take on more risk. And without realizing it, you step outside the system. Because greed doesn't feel dangerous. It feels like opportunity. But often, it leads to the same outcome as fear: loss, just through a different path. Now pause. Think about this pattern. Fear pushes you out at the bottom. Greed pulls you out at the top. And both lead to the same mistake: leaving the system. As reinforced in the psychology of consistent discipline, the hardest moments are not when things are easy, but when your emotions try to negotiate your actions. Now let's go deeper. There's a third trap: impatience. We've touched on it before, but here it becomes emotional. You've been consistent, you've been disciplined, but the results feel slow, too slow, and your mind starts to question everything. Is this really working? Should I be doing more? Am I falling behind? And in that moment, you forget the nature of compounding. You forget that progress is invisible at first. You forget that time needs space to work. And you interrupt the process, not because it failed, but because it didn't meet your expectations. This is the quietest trap, because it feels logical, but it's driven by discomfort, the discomfort of waiting. Now here's the most important realization of this chapter. You don't rise to the level of your strategy. You fall to the level of your discipline. You can have the best system in the world, the simplest strategy, the clearest path. But if your emotions control your decisions, the system breaks. So the real work is not learning more strategies. It's mastering your reactions. Let's make this practical. When fear appears, you don't act. You pause. You remind yourself, this is temporary. This is expected. This is part of the system. When greed appears, you don't chase. You return to structure. You remind yourself, my plan doesn't change because of excitement. My system doesn't need adjustment. When impatience appears, you don't interrupt. You zoom out. You remind yourself, this takes time. This is working beneath the surface. This is the process. Now imagine this level of control, not perfect, but consistent. You feel emotions, but you don't obey them. You notice reactions, but you don't act on impulse. You stay within the system even when everything around you suggests otherwise. That is discipline. Not loud, not dramatic, but powerful. Because every time you resist the urge to react, you strengthen your position. Every time you stay consistent, you build momentum. Every time you trust the process, you move closer to the outcome. And over time, those small decisions compound, just like money does. Now let's connect this to something bigger, life itself. Because these emotional traps don't only exist in investing, they show up everywhere. In your habits, in your goals, in your relationships. Fear makes you quit too early. Greed makes you chase the wrong things. Impatience makes you abandon progress. So, learning to manage these emotions doesn't just improve your finances, it improves your life. Because you become someone who stays, someone who finishes, someone who builds instead of constantly restarting. And that identity is rare. Now here's your reflection. When emotions rise, do I follow them or observe them? Because that answer determines your direction. And in the next chapter, we're going to break down the practical side of this system. How to actually set it up, how to remove friction, and how to make consistency automatic. So you don't have to rely on willpower every single time, because the best system is the one you don't have to think about. Chapter 8. Build it once, let it run forever. There is a moment in every system where effort turns into automation, where discipline turns into default, where something that once required focus begins to run on its own. That is the moment everything changes, because until then, you are relying on willpower. And willpower is unreliable. It fades, it fluctuates, it disappears when life gets busy. But a system doesn't need motivation. It doesn't ask how you feel. It simply executes. And this is the real power behind the lazy millionaire system. Not laziness in action, but intelligence in design. Now let's make this real, because up until now, you've understood the mindset, the principles, the psychology, but none of that matters if you don't translate it into structure. So here's the shift. You don't rise because you try harder. You rise because your system makes progress inevitable. Let that sink in, because most people approach money like a task, something they handle occasionally, something they think about when they remember, something they adjust based on mood. But wealth is not built occasionally, it's built consistently, and consistency requires automation. Now imagine this, every month, without thinking, without effort, without hesitation, a portion of your income moves into an index fund. No decision, no delay, no emotional interference, just execution, again and again, month after month, year after year. That's not effort, that's design. And design removes friction. Let's break it down. The goal is not to rely on discipline every time. The goal is to eliminate the need for discipline. Because discipline is exhausting when it's required constantly, but when you build a system, discipline becomes front-loaded. You make the decision once, and the system carries it forward. This is what separates people who succeed quietly from those who struggle loudly. The quiet ones don't depend on daily motivation. They build systems that protect their future. Now, here's something important. Simplicity is not weakness, it's strength, because the more complex your system, the more likely it is to break. Too many steps, too many decisions, too many points of failure, and eventually you stop. But a simple system, one that requires minimal input, becomes sustainable. And sustainability is what allows compounding to work. As reflected in the principle of focused consistency, small repeated actions done daily or regularly create outcomes that feel impossible in the beginning. Now let's talk about friction, because friction is what stops most people, not lack of knowledge, not lack of opportunity, but small barriers. I'll do it later. I'll start next month. I'll think about it tomorrow. And those small delays turn into years. So your system must remove friction. Make it easy to start, easy to continue, easy to maintain, because the easier it is, the more likely you are to stay consistent. Now pause. Think about your current financial behavior. How many decisions do you make each month? How many moments require effort? How often do you delay, even when you know what to do? Because every one of those moments is a potential break in the system, and your goal is to eliminate as many of those breaks as possible. Now imagine the opposite, a system that runs quietly, in the background, no constant checking, no emotional reactions, no overthinking, just steady progress. That's what you're building, not excitement, not intensity, but stability. Now here's the deeper truth. Automation is not just about convenience, it's about protection. It protects you from your future self, the version of you that feels tired, distracted, unmotivated, because that version will exist. Life will get busy, things will get complicated, and in those moments, you won't feel like investing, you won't feel like being disciplined, but if your system is already in place, you don't have to feel like it. It happens anyway. And that's the difference between relying on intention and relying on structure. Now let's go even deeper, because this is not just about money, this is about identity. When you automate something, you reinforce who you are. You become someone who invests, someone who plans, someone who builds, and over time, that identity spreads into your habits, your decisions, your mindset, because systems shape behavior, and behavior shapes outcomes. Now ask yourself this: what would my life look like if the most important things were automatic? Your growth, your learning, your health, your finances. Not dependent on mood, not dependent on energy, but built into your life. That's the real goal. And it starts here, with something simple, something repeatable, something consistent. Now here's the final shift for this chapter. Success is not built by what you do once, but by what you design to repeat. So don't aim for intensity. Don't aim for perfection. Aim for systems. Because systems remove pressure. They create clarity. And most importantly, they allow you to continue without interruption, without hesitation, without doubt. And in the next chapter, we're going to explore something even deeper. Why most people sabotage their own systems, even when they know exactly what to do. Because understanding that will protect everything you've started building. Dear viewers, write which city you're from It's interesting to see which corners of the world are watching our videos. Chapter 9. The Invisible Self-Sabotage. There's a moment that doesn't look dangerous. There's no panic, no crisis, no dramatic mistake, just a quiet shift, a small deviation, a subtle change in behavior, and yet this is where most systems begin to break. Not because they were wrong, but because they were abandoned. Let's go deeper, because this chapter is not about strategy. It's about you. It's about the part of you that starts strong and slowly drifts, not intentionally, not consciously, but gradually, and over time. That drift becomes distance. Distance from your system. Distance from your consistency. Distance from your future. Now here's the truth most people don't want to face. You don't lose your system in one moment. You lose it in small compromises. It starts simple. You skip one contribution. It's fine. I'll make up for it later. Then another. I just need a break this month. Then another. I'll restart when things feel better. And just like that, the system pauses. Momentum slows. And the hardest part? It feels justified. Because life gets busy. Unexpected expenses happen. Energy drops. Motivation fades. And in those moments, your mind begins to negotiate. But here's the danger. Every time you negotiate with your system, you weaken it. Because consistency doesn't break all at once. It erodes, quietly, gradually, until one day, you're no longer in the system at all. Now pause. Be honest with yourself. How many times have you started something, felt motivated, and then slowly stopped? Not because it didn't work, but because you didn't stay. This is not failure. This is pattern. And patterns repeat until you become aware of them. As emphasized in the discipline mindset, the real battle is not against the task, but against the part of you that wants to avoid it. Now let's expose the deeper layer. Why do people sabotage their own systems? Because systems remove emotion. They remove excitement. They remove the feeling of control. And for many people, that feels uncomfortable. They want to feel involved. They want to feel active. They want to feel like they're doing something. So they interfere, they adjust, they tweak, they change, and without realizing it, they break the very thing that was working. This is the paradox. The system works best when you leave it alone, but that's what most people struggle to do. Now, let's go even deeper. There's another form of self-sabotage, comparison. You look around. You see others making faster gains, taking bigger risks, getting quick results, and suddenly, your steady system feels slow. Too slow. You start questioning, am I doing enough? Should I be doing more? Am I missing something? And just like that, doubt enters. Not because your system is wrong, but because you compared your path to someone else's. And comparison breaks focus because it shifts your attention away from your system towards someone else's outcome. Now here's the truth. Different paths produce different timelines. Some people take risks and win quickly. Others take risks and lose everything, but you only see the winners. You don't see the failures. You don't see the full picture, so you react based on incomplete information, and that reaction pulls you out of your system. Now let's bring it back. Your goal is not to win fast. Your goal is to win consistently. Your goal is not to chase outcomes. Your goal is to follow a structure, because structure removes comparison. It removes noise. It keeps you focused on what matters. Now here's the most important shift of this chapter. Your system doesn't need improvement. Your consistency does. Let that land. Because most people try to fix the system when the real issue is behavior. They look for better strategies, better tools, better timing. But the truth is, they already had what they needed. They just didn't stay with it. So instead of asking, what's the best strategy? Start asking, how do I protect my consistency? Because that question leads to real progress. Now let's make this practical. How do you protect your system? You simplify it. You reduce decisions. You remove friction. You automate what you can. And most importantly, you commit, not emotionally, but structurally. You treat it like something non-negotiable, like a bill, like a responsibility, because the moment it becomes optional, it becomes vulnerable. Now imagine this. You don't debate each month. You don't question each contribution. You don't rely on how you feel. You follow the system automatically, consistently, quietly. That's how momentum builds, not through intensity, but through repetition. Now, here's your reflection. Where in my life am I negotiating instead of committing? Because that answer reveals everything. And in the next chapter, we're going to uncover something even more powerful. The role of identity in building wealth. Because once you shift how you see yourself, everything else begins to align. Chapter 10. Become the kind of person who builds wealth. There is something deeper than strategy, deeper than systems, deeper than money itself. And once you understand it, everything else becomes easier. Because the truth is, you don't get results by accident. You get results by identity. Let that sink in. Because most people try to change outcomes without changing who they are. They want better finances, but keep the same habits. They want more freedom, but keep the same patterns. They want different results, but stay the same person. And that never works. Here's the shift. You don't rise to wealth, you grow into it. Because wealth is not just something you have. It's something you become aligned with. Through behavior, through consistency, through identity. Now let's go deeper. What does that actually mean? It means you stop seeing investing as something you do occasionally and start seeing it as part of who you are. You are not trying to invest. You are someone who invests. You are not hoping to build wealth. You are someone who builds. And that shift changes everything. Because when something becomes part of your identity, it stops feeling optional. It stops feeling forced. It becomes natural. As reflected in the principle of personal ownership, real change begins when you stop waiting and decide that your life and your results are your responsibility. Now pause. Ask yourself honestly, how do I currently see myself when it comes to money? Do you see yourself as someone who reacts, someone who delays, someone who avoids, or someone who builds? Because that internal answer drives your external behavior. Now here's the important part. Identity is not built in one moment. It's built through repetition. Every time you follow your system, you reinforce who you are. Every time you stay consistent, you strengthen that identity. Every time you choose discipline over emotion, you become someone different. And over time, those small actions compound, just like money does. Now let's connect this back to index funds, because this is where the lazy millionaire system becomes powerful. It's not just about the investment. It's about the behavior it reinforces: consistency, patience, stability. You become someone who thinks long-term, someone who ignores noise, someone who trusts structure. And that identity protects you from fear, from greed, from impatience, because you're no longer reacting as a beginner. You're acting as someone aligned with the system. Now imagine this. The market drops. Instead of panic, you feel understanding, because you know this is part of the process. The market rises. Instead of chasing, you stay grounded, because your system doesn't change. Time passes. Instead of doubt, you feel calm, because you trust your structure. That's identity. Not loud, not dramatic, but stable. And stability creates confidence. Now here's something most people overlook. Confidence does not come from results. It comes from consistency. Because results fluctuate. They go up, they go down. But consistency, that's something you control. And when you control your actions, you build real confidence. Now let's go even deeper. There is a reason most people struggle to maintain systems. It's not lack of knowledge, it's lack of identity alignment. They see themselves as someone who tries, someone who starts, someone who figures things out, but not someone who finishes, not someone who builds long term. And until that identity shifts, their behavior will always reflect it. So the real question is not, what should I do? The real question is, who do I need to become? Because once that answer is clear, your actions follow naturally. Now let's make this practical. How do you build this identity? You start small. You stay consistent. You prove it to yourself, not through big wins, but through repeated actions. You invest regularly. You don't skip. You don't negotiate. You don't rely on motivation. You follow the system again and again and again. And over time, your mind shifts. This is who I am, not something you try, something you do. And that shift is powerful, because identity-driven behavior is sustainable. Now here's the deeper truth. You don't need to feel ready. You need to act until you become ready. Because readiness comes after action. Confidence comes after repetition. Clarity comes after consistency, not before. So stop waiting to feel like the kind of person who builds wealth. Start acting like one and let the identity catch up. Now imagine your future self, calm, stable, not reacting to every financial stress, not dependent on every paycheck, not overwhelmed by uncertainty. That version of you is not built in one moment. It's built through thousands of small decisions. Decisions like the ones you're making now. Now here's your reflection. If I repeated my current behavior for the next 10 years, where would it lead me? Because that answer is your direction. And in the next chapter, we're going to uncover something even more practical. How to choose the right index funds without overcomplicating the process. Because simplicity is still the foundation, but clarity makes it easier to stay. Chapter 11. Simplicity over selection. There's a moment where most people get stuck again. Not at the beginning, not at the mindset, but right here at the point of choosing. Because once they understand the system, once they accept the idea of index funds, a new question appears. Which one is the best? And suddenly, simplicity becomes complicated again. Research begins. Comparisons. Endless tabs open. Different opinions, different strategies, different voices pulling in different directions, and without realizing it, they fall back into the same trap. Overthinking. Let's pause here, because this is where many people lose momentum. Not because they lack understanding, but because they believe the decision has to be perfect. Here's the truth. The perfect choice doesn't matter nearly as much as consistent action. Let that settle. Because most people delay for weeks, months, even years, trying to find the best option, when in reality, the difference between good choices is far smaller than the difference between starting and waiting. Now let's bring clarity. Index funds are designed to be broad, diversified, stable. They track markets, not individual winners. So when you choose one, you're not making a fragile decision. You're aligning with a system, and that system is already diversified, already structured, already designed to grow over time. So instead of asking, what's the best index fund? Start asking, does this fund align with the system I want to follow? Because alignment matters more than optimization. Now let's go deeper. There are generally a few simple paths people follow. Some choose funds that track the entire global market. Some choose funds that focus on large companies. Some choose a combination. But here's what matters: consistency, low complexity, low friction. Because the more complicated your setup becomes, the harder it is to maintain. And remember, maintenance is everything. As emphasized in system-based thinking, structure is what creates long-term stability, not constant adjustment. Now pause. Think about this. What is your real goal? To build wealth over time, to stay consistent, to reduce stress, to remove emotional decisions. So your choice should support that goal, not challenge it, not complicate it. Support it. Now here's another trap to avoid. Over-diversification. It sounds smart. It feels safe, but often it creates confusion. Too many funds, too many allocations, too many decisions, and eventually you lose clarity. Because simplicity creates focus, and focus creates consistency. Now let's talk about something even more important: costs. Because this is one area where small differences matter. Index funds are powerful, but they are designed to be low cost. And over time, even small fees can reduce your growth. Not dramatically at first, but gradually, quietly. And that's why the system emphasizes simplicity, because simplicity often comes with lower costs. And lower costs mean more of your money stays invested, more of your money compounds. Now think about that. You're not just choosing an investment, you're choosing a structure that will run for years, maybe decades. So clarity matters, but perfection does not. Now here's the deeper shift. You don't build wealth by making perfect choices. You build it by committing to good ones consistently. Because perfection creates hesitation, and hesitation delays progress. Now imagine this. You choose a simple index fund. You set up your system. You begin contributing regularly. You don't revisit the decision every week. You don't second guess constantly. You stay. You follow through. Years pass. And that single decision, combined with consistency, becomes powerful. Not because it was perfect, but because you stayed with it. Now let's connect this back to identity, because this is where everything aligns. You're no longer someone searching for the best option. You're someone who executes, someone who builds, someone who understands that action beats hesitation. Now ask yourself, am I trying to optimize or am I trying to progress? Because those are two very different paths. Optimization can become endless. Progress requires movement, and movement creates results. Now here's the final realization for this chapter. Simplicity is not about doing less. It's about removing what doesn't matter. And once you remove what doesn't matter, what remains becomes clear. So don't get stuck here. Don't let the need for perfect choices delay your progress. Choose a path. Keep it simple, and most importantly, stay consistent, because the system works only if you stay in it. And in the next chapter, we're going to explore something even more powerful: how to stay consistent, even when life becomes unpredictable. Because consistency is easy when things are stable, but real growth happens when things are not. Chapter 12. Staying consistent when life gets unstable. Consistency sounds easy when everything is calm, when income is steady, when motivation is high, when nothing unexpected happens. But life doesn't stay like that. There are months where everything flows, and there are months where everything feels uncertain. Expenses appear, energy drops, focus shifts, priorities change, and suddenly the system you built feels harder to maintain. This is where most people break. Not at the beginning, not in the learning phase, but in the middle, when life interrupts their rhythm. Now here's the truth that changes everything. A system is not proven when life is easy. It's proven when life is unpredictable. Because anyone can stay consistent when conditions are perfect. But real discipline, real structure, shows itself when conditions are not. Now pause. Think about your own life. How often do your habits change based on how you feel? How often do you stay consistent only when things are smooth? Because that pattern is what we need to break. As reinforced in the mindset of personal growth, progress doesn't come from waiting for the right conditions. It comes from acting despite them. Now let's go deeper. Why does inconsistency happen during difficult times? Because your mind shifts into survival mode. It prioritizes immediate needs, immediate comfort, immediate relief. Long-term thinking fades, and that's natural. But here's the problem. When you pause long-term systems for short-term discomfort, you extend the discomfort into your future, because every pause breaks momentum. Every delay pushes results further away. Now, this doesn't mean you ignore reality. It doesn't mean you pretend everything is fine. It means you adapt without abandoning. That's the difference. Let's make this practical. There will be times when you can't invest as much. That's okay. But the goal is to keep the system alive, even if it's smaller, even if it feels insignificant. Because consistency is not about perfection. It's about continuity. Now think about this. A small contribution during a difficult time is more powerful than a large contribution, followed by a long pause. Because the small contribution keeps the habit intact, keeps the identity intact, keeps the system running, and that matters more than the amount itself. Now let's talk about mindset, because during unstable times, your thinking becomes your anchor. You need to remind yourself, this is temporary. This phase will pass. My system is long-term. Because without that reminder, you start reacting, and reaction breaks structure. Now here's another important shift. You need to separate your system from your emotions. Your system doesn't change because you feel uncertain. Your system doesn't change because the market moves. Your system doesn't change because life becomes busy. It stays because it was designed for the long term. Now imagine this. Life becomes chaotic. Things feel uncertain, but your system continues quietly, automatically, without requiring your full attention. That's stability. And stability creates confidence. Because even when everything else feels unpredictable, you have something that remains steady. Now let's go even deeper. There's a hidden advantage in staying consistent during difficult times. It strengthens your identity because anyone can be disciplined when it's easy. But when you stay consistent during challenges, you prove something to yourself, that you don't rely on conditions, that you don't depend on mood, that you follow through regardless. And that proof builds confidence at a deeper level. Now here's the key realization. You don't build strength by avoiding difficult moments. You build it by staying consistent through them. And that strength translates into everything, not just money. Your habits, your mindset, your resilience. Now pause again. Ask yourself, what happens to my systems when life gets difficult? Do they pause? Do they break? Or do they adapt and continue? Because that answer reveals your long-term trajectory. Now let's make this even clearer. You don't need to be perfect. You don't need to maintain the same intensity, but you do need to stay connected to the system, because connection prevents collapse, even if it's minimal, even if it's imperfect. Stay connected. Now imagine your future self looking back, not at how much you invested, but at how consistent you were, at how you handled difficult periods, at how you stayed when it would have been easier to stop. That's what defines the outcome, not isolated actions, but sustained behavior. Now here's your reflection. Can I commit to consistency even when it's inconvenient? Because real growth lives in inconvenience. And the ability to continue when it's not easy is what separates temporary effort from lasting results. In the next chapter, we're going to uncover something even more powerful: how time and patience quietly turn ordinary people into financially free individuals. Because once you truly understand that timeline, you stop rushing and start trusting the process. Please like and subscribe if you want a better future for your children, your family, and yourself. It's very difficult to achieve success today, but I'm sure you'll succeed. All you have to do is learn and discover new things. Chapter 13, the timeline nobody talks about. There is a reason most people quit too early. It's not because the system doesn't work. It's because they misunderstand the timeline. They expect progress to feel fast, visible, exciting. But real wealth doesn't grow that way. It grows quietly, slowly, almost invisibly at first. And that's where most people lose faith, because they measure progress too soon. They look after a few months, maybe a year, and think, this isn't enough. But here's the truth that changes everything. You don't judge a long-term system with short-term expectations. Let that settle. Because once you understand the real timeline, you stop rushing, you stop doubting, you stop interfering. Now let's break it down. The journey of building wealth through index funds usually follows 3 phases. The first phase feels like nothing. You contribute, you stay consistent, but the numbers barely move. Progress feels slow, almost disappointing. This is where most people quit, because the effort feels disconnected from the reward. But what they don't see is what's being built beneath the surface: habits, consistency, momentum, the foundation. Now, here's the key. The first phase is not about results. It's about survival. Survival of the system, survival of your consistency. Because if you don't make it through this phase, you never reach the next. Now let's move to phase 2. This is where things start to feel different. The growth becomes noticeable, not dramatic, but visible. You begin to see progress. You begin to feel momentum. Your contributions matter, but now your returns start to matter too. This is where confidence builds, because the system begins to prove itself. But here's the danger. This phase can create overconfidence. You might feel tempted to change things, to take more risks, to accelerate the process. And if you do, you risk breaking the system. So even here, discipline matters. Now we reach phase 3. This is where everything changes. Not suddenly, but undeniably. Your investments begin to grow faster than your contributions. Time takes over. Compounding accelerates. And what once felt slow, now feels powerful. This is where the system rewards you, not for being smart, not for being perfect, but for staying. Now pause. Think about this. Most people never reach phase 3, not because it's impossible, but because they quit in phase 1. They interrupt the process before it has time to work. As reinforced in the concept of long-term consistency, disciplined patience is what separates those who build wealth from those who remain stuck in cycles. Now, let's go deeper. Why is this timeline so hard to accept? Because we live in a world of speed, instant results, instant feedback, instant gratification. Everything is designed to reward quick action. But wealth doesn't follow that pattern. It rewards patience, consistency, time. And that creates a disconnect because your environment trains you to expect fast results, while your system requires slow growth. And if you don't understand that, you'll feel like something is wrong, when in reality, everything is working exactly as it should. Now here's the shift. Slow growth is not a sign of failure, it's a sign of stability. Because fast growth often comes with high risk, high volatility, high emotional pressure. But slow growth creates a stable foundation, one that can last. Now imagine this. You stay consistent, month after month, year after year. At first, it feels quiet. Then, it feels steady. Then, it feels powerful. And one day, you realize something. You're no longer chasing money. Money is working for you, not dramatically, not loudly, but consistently. And that's the moment everything shifts. Now let's bring this back to your mindset. Because understanding the timeline changes how you think. You stop asking, how fast is this growing? And start asking, am I staying consistent? You stop focusing on short-term fluctuations and start focusing on long-term direction. You stop reacting and start trusting. Now here's the most important realization of this chapter. The timeline only works if you respect it. You cannot rush it. You cannot skip phases. You cannot force acceleration. You can only stay consistent and allow time to do its job. Now ask yourself, am I willing to stay even when progress feels slow? Because that answer determines whether you reach the later phases. Now imagine your future self again, looking back, not at the speed of your growth, but at your consistency, at your patience, at your ability to stay when it would have been easier to quit. That's what builds wealth, not moments, but years, not intensity, but endurance. And in the next chapter, we're going to uncover something even more important, the difference between being rich and being free. Because those are not the same thing, and understanding that difference will change how you approach everything. Chapter 14, the difference between being rich and being free. There's a belief that quietly shapes how people think about money, a belief that sounds right, but leads many in the wrong direction. It's the idea that being rich and being free are the same thing, but they're not even close. Because being rich is about how much you have. Being free is about how much you need. Let that sit with you, because this single distinction changes everything. Now think about it. You can earn a high income, have a large house, drive expensive cars, and still feel trapped. Still feel pressure, still feel dependent on your next paycheck. Because if your lifestyle requires constant income, your freedom is limited, no matter how much you earn. As highlighted in the core financial insight, dependency disguised as comfort is one of the biggest traps people fall into. Now, let's flip the perspective. Imagine someone with a simpler lifestyle, lower expenses, a consistent investment system. Their money grows over time, their needs are controlled, their system is stable, and one day they realize something powerful. Their investments can support their life, not completely at first, but gradually, and over time, that support grows. Until one day, they no longer depend entirely on active income. That's freedom. Not loud, not flashy, but real. Now here's the key realization. Freedom is not about how much you earn. It's about how little you depend. Because dependency creates pressure, and pressure limits choice. Now let's go deeper. Why do so many people chase being rich, but never reach freedom? Because they focus on increasing income without controlling structure. They earn more, but they spend more. They upgrade their lifestyle, but also their obligations. And with every upgrade, their dependency increases, not decreases. So even as their income grows, their freedom stays the same, or sometimes even shrinks. Now pause. Think about your own life. If your income stopped today, how long could your current lifestyle continue? That question reveals your level of freedom. Now, this is not about fear. It's about awareness. Because once you see this clearly, you start making different decisions. You stop chasing appearance and start building stability. You stop focusing on income alone and start focusing on structure. Because structure is what creates freedom. Now let's connect this back to index funds, because this is where the system becomes powerful. When you invest consistently, your money begins to grow, not instantly, not dramatically, but steadily. And over time, that growth becomes meaningful. It begins to replace a portion of your income, then a larger portion, then eventually a significant part of your life. And that's when the shift happens. You're no longer working just to survive. You're working by choice, because your system is supporting you. Now imagine that feeling, not needing to rush, not needing to accept every opportunity out of pressure, not needing to stay in situations that drain you, because your financial foundation gives you options. That's freedom. Now here's the deeper truth. Money doesn't just buy things, it buys time, space, and choice. And those three things are what create a different life. Now let's go even deeper. Freedom is not an endpoint. It's a direction. It's something you build gradually through consistent actions, through intentional decisions, through systems that support your future, not overnight, not instantly, but steadily. Now here's the mistake most people make. They think freedom requires extreme wealth, millions, huge investments, massive income. But in reality, freedom is relative. It depends on your lifestyle, your needs, your structure, because the less you need, the easier it is to become free. Now ask yourself, what kind of life am I designing? One that requires constant effort to maintain, or one that becomes easier over time? Because that choice determines everything. Now let's connect this to identity again, because this is where it all aligns. You're not just someone who invests. You're someone who builds freedom through systems, through discipline, through patience. And that identity guides your decisions. You don't chase unnecessary upgrades. You don't increase obligations without intention. You build carefully, you think long term, and over time, your life becomes lighter, not heavier. Now here's the most important realization of this chapter. Being rich impresses others. Being free changes your life. Let that stay with you, because it shifts your focus from external validation to internal stability. Now imagine your future again, not defined by how much you have, but by how much control you feel. Control over your time, your decisions, your direction. That's the real goal, and it starts with simple actions, consistent investing, stable systems, intentional choices. Now here's your reflection. Am I building a life that looks successful or a life that feels free? Because those paths are not always the same. And in the next chapter, we're going to explore something even more powerful: how small daily financial habits shape your entire future. Because freedom is not built in big moments. It's built in small decisions, repeated over time. Chapter 15, the small habits that quietly build your future. There's a hidden force shaping your financial life right now, not your salary, not your investments, not even the market, your habits. The small ones, the ones you don't think about, the ones that feel insignificant in the moment. Because here's the truth most people overlook. You don't build wealth through big decisions. You build it through small behaviors repeated daily. Let that land, because this is where everything becomes real. Up until now, you've understood the system, the mindset, the structure. But this chapter is where it becomes personal, because your daily habits either support your system or slowly destroy it. Now pause. Think about your current behavior with money. Not the big decisions, the small ones, the daily choices, how you spend, how you save, how you react. Because those small actions compound, just like your investments do. Now here's the shift. Every financial habit is either building your future or borrowing from it. There is no neutral. Every choice moves you forward or pulls you back. Now let's go deeper. Most people think habits don't matter because the amounts feel small. A little extra spending here, a missed contribution there, a delayed decision. It feels harmless. But over time, those small actions accumulate, quietly, just like investments do. And eventually, they create outcomes. Not dramatic, but undeniable. As emphasized in the principle of daily consistency, what you do in small, repeated moments defines your long-term results. Now let's make this real. Imagine two people again. Same income, same opportunities, but different habits. One spends without awareness, delays investing, acts based on emotion. The other follows a system, invests consistently, stays intentional. At first, there's no visible difference. Their lives look similar, but over time, the gap grows, not suddenly, but steadily, because habits compound. Now here's something important. Good habits don't feel powerful in the moment. They feel boring, repetitive, almost invisible, but that's exactly why they work. Because most people won't stay consistent with something that feels ordinary. They chase excitement. They chase big changes. They chase dramatic shifts. But real progress lives in repetition. Now let's talk about awareness, because you can't change what you don't notice. Most people spend money unconsciously, reactively, without intention, And that lack of awareness creates leakage, small amounts, leaving constantly, without direction, without purpose. And over time, that leakage becomes significant. Now imagine the opposite. You become aware, not obsessive, not restrictive, just intentional. You understand where your money goes. You align your spending with your values. You remove unnecessary drains, and you redirect that energy into your system. Now something changes, not dramatically, but structurally. Your habits begin to support your future instead of working against it. Now here's the deeper truth. You don't need extreme discipline, you need aligned habits. Because extreme discipline is exhausting. It's hard to maintain. But aligned habits become natural because they match your identity. They match your goals. They match your direction. Now let's connect this to your system. Every contribution you make is not just a financial action, it's a behavioral reinforcement. It tells your mind, this is who I am. And over time, that identity becomes stronger. Now imagine your daily life. Small decisions, simple actions, consistent behavior, not dramatic, not overwhelming, but aligned. And over time, those small actions build something powerful, not instantly, but inevitably. Now here's something most people don't realize. Bad habits feel good in the moment. Good habits feel good in the long term. And that difference is what creates struggle. Because your mind is wired for immediate reward, but your future requires delayed gratification. So the real skill is not just building habits. It's choosing long-term satisfaction over short-term comfort. Now pause again. Ask yourself, what habits are quietly shaping my future right now? Not the ones you plan, the ones you repeat, because those habits are your direction. Now let's make this practical. You don't need to change everything at once. You don't need a complete overhaul. You need small adjustments, consistent ones. You invest regularly. You become aware of spending. You reduce unnecessary leakage. You reinforce your system. And over time, those small changes compound, just like your investments. Now here's the key realization of this chapter. Your future is not created by what you intend. It's created by what you repeat. So don't focus on big moves. Focus on daily alignment. Because daily alignment builds long-term results. Now imagine your life years from now, not shaped by one decision, but by thousands of small ones, each one moving you forward, each one reinforcing your system, each one building something real. That's how freedom is built. Quietly, consistently, through habits. Now here's your reflection. If I kept my current habits unchanged, where would they take me? Because that answer is your trajectory. And in the next chapter, we're going to uncover something even deeper. How to protect your wealth once it starts to grow. Because building wealth is only part of the journey. Keeping it is the next level. Chapter 16. Protecting what you build. There comes a point in this journey where the question changes. At the beginning, you ask, how do I start? How do I stay consistent? How do I build? But over time, as your system grows, as your investments begin to compound, as your habits become stable, a new question appears. How do I protect this? Because building wealth is only the first phase. Keeping it requires a different level of awareness. Now here's the truth most people don't expect. It's easier to build wealth than it is to protect it. Because building requires consistency, but protecting requires discipline under pressure. and pressure changes behavior. Now let's go deeper. What are the real threats to your wealth? Not just market fluctuations, not just economic changes, but internal risks, your decisions, your reactions, your habits. Because most wealth is not lost by accident, it's lost through behavior. Let's expose the main dangers. The first is lifestyle inflation. As your income grows, as your investments grow, there's a natural urge to upgrade your life. Better home, better car, more comfort, more convenience, and none of this is wrong. But here's the danger. If your lifestyle grows faster than your assets, you stay dependent. Because every upgrade creates new obligations, new expenses, new pressure, and suddenly, even though you have more, you feel the same, or sometimes even more constrained. Now pause, think about that. Growth in income does not guarantee growth in freedom, only structure does. Now let's move to the second threat. Overconfidence. This one is subtle, dangerous, because it feels positive. Your investments grow, your system works, you feel smart, you feel in control. And slowly, you begin to believe you can do more, take bigger risks, try new strategies, chase higher returns. And without realizing it, you step outside the system. Because success creates confidence, but unchecked confidence creates risk. Now here's the key realization. The system works because it is simple, not because it is aggressive. So the moment you complicate it, you introduce instability. Now let's go to the third threat, neglect. This one is quiet, almost invisible. Your system is running, everything feels stable, so you stop paying attention, not emotionally, but structurally. You stop reviewing, you stop maintaining awareness, and over time, small issues grow, because even the best systems require occasional attention, not constant action, but awareness, because awareness prevents drift. Now here's the deeper truth. Protection is not about control. It's about awareness. You don't need to micromanage. You don't need to react constantly. But you do need to stay connected. Now let's connect this to your identity again. Because this is where everything aligns. You're no longer someone who just builds wealth. You're someone who protects it. You understand the risks, not just external, but internal. And that awareness guides your decisions. Now imagine this. Your investments grow. Your system becomes stronger. But your behavior stays grounded. You don't chase. You don't overreact. You don't inflate your lifestyle beyond intention. You stay aligned. That's protection. Now let's go even deeper. Protection is not just about money. It's about mindset. Because your mindset determines your decisions, and your decisions determine your outcomes. So protecting your wealth also means protecting your thinking from comparison, from pressure, from unnecessary influence. Because the moment your thinking shifts, your behavior follows. Now ask yourself, what would cause me to break my system? Fear? Greed? Pressure from others? Lifestyle expectations? Because identifying those triggers is how you protect against them. Now let's make this practical. You don't need complex strategies. You don't need constant adjustments. You need awareness. You maintain your system. You review periodically. You stay aligned with your goals. You avoid unnecessary risk. And most importantly, you don't abandon what works. Now here's the key realization of this chapter. Wealth is not just built through discipline. It is preserved through restraint, because growth creates opportunity, but restraint protects it. Now imagine your future again, not just someone who built wealth, but someone who kept it. who protected it, who allowed it to grow over time without interruption. That's the full journey. Not just accumulation, but preservation. Now here's your reflection. Am I preparing to protect what I build, or just focused on building it? Because both matter, and ignoring one weakens the other. In the next chapter, we're going to uncover something even more powerful. How to reach the point where your investments begin to replace your income, and what that transition really looks like. Because that moment changes everything. Chapter 17. When money starts working without you. There is a moment in this journey, quiet, almost unnoticeable at first, but powerful beyond words. A moment where something shifts, not in your effort, not in your routine, but in the role money plays in your life. Because up until now, you have been working for money, earning it, saving it, investing it, building it. But then, slowly, gradually, something changes. Your money begins to work for you, not occasionally, not randomly, but consistently. And that moment is where everything feels different. Now let's be clear. This doesn't happen overnight. It doesn't arrive suddenly. It builds quietly through years of consistency, through discipline, through patience, until one day you notice something. Your investments are growing, even when you're not thinking about them, even when you're not actively contributing, even when you're focused on other parts of your life. That's the shift. That's the beginning of independence. Now, here's the truth most people misunderstand. Financial independence is not a moment. It's a transition. It doesn't happen all at once. It happens in stages. Let's walk through them. The first stage is contribution-driven. Your growth comes mostly from what you invest, your effort, your discipline, your consistency. At this stage, you are building the foundation. Now, the second stage is mixed growth. Your contributions still matter, but now your investments begin to contribute as well. You start to see the impact of compounding, not just from what you add, but from what has already been built. This is where momentum begins. Now, the third stage is where the shift becomes undeniable. Your investments begin to grow more than what you contribute. Read that again. Your money is now working harder than you. And that changes everything, because effort is no longer the primary driver. Time is. Now pause. Think about what that means. For years, you've been the engine. Now, your system becomes the engine, and you become the guide. That's freedom in motion. Now let's go deeper. What does this actually feel like? It feels like reduced pressure. Not complete freedom yet, but less dependency, less urgency, more space. Because you know that even if you slow down, your system continues. Now imagine that. You're not starting from zero every month. You're building on something that already exists. That's the power of compounding. And this is why patience matters so much, because this stage only comes to those who stay. As reinforced in the long-term mindset, disciplined consistency over time is what allows systems to eventually operate independently of constant effort. Now let's talk about the emotional shift, because this moment changes how you think. You stop obsessing over every dollar. You stop reacting to every fluctuation. You start seeing money differently, not as something fragile, but as something structured, stable, growing. Now here's the important part. This stage requires restraint, because once you see growth, you might feel tempted to accelerate, to take more risks, to maximize returns. But this is where many people make mistakes, because the system works. precisely because it is stable. So your role is not to interfere. It's to continue. Now imagine this. Your investments grow steadily. Your system runs consistently. And over time, a portion of your life is supported by that system, then a larger portion, then eventually a significant part. And that's when the next shift happens. You begin to ask a different question, not how much do I need to earn, but how much do I actually need? Because once your system supports part of your life, you realize something. You don't need as much as you thought. And that realization brings clarity. Now let's connect this back to freedom, because this is where it becomes real. You're no longer dependent on one source. You have options. You have flexibility. You have space to make decisions differently. That's the beginning of independence. Now, here's the deeper truth. Freedom is not when you stop working. It's when you no longer have to. Because that's the real goal. Not escape. Choice. Now pause. Ask yourself, what would I do differently if money was no longer my primary constraint? Because that question reveals your true direction. Now let's bring it back. You don't rush this stage. You don't force it. You build toward it through consistency, through patience, through discipline, and over time, it arrives quietly, gradually, powerfully. Now here's the key realization of this chapter. The moment your money starts working for you, your life begins to expand. Not instantly, but structurally, because your dependency decreases and your options increase. Now imagine your future again, not defined by effort alone, but supported by a system, not driven by urgency, but guided by choice. That's what you're building. Not just wealth, but independence. And in the next chapter, we're going to explore the final layer of this journey, how to maintain purpose once money is no longer the primary driver, because freedom without direction can feel empty, and understanding that completes the system. Chapter 18. When freedom feels empty. There is a part of this journey that almost nobody talks about, because it comes after the struggle, after the discipline, after the years of consistency. It comes when the system is working, when the pressure is reduced, when money is no longer the center of every decision, and yet something feels different, not bad, but unfamiliar. Because for so long, your life was driven by necessity, by responsibility, by the need to earn, to build, to survive. And now that pressure begins to fade, and in its place, a new question appears. What now? This is the part most people are not prepared for, because they spent years learning how to earn, but never learned how to live without urgency. Now let's go deeper. Money gives you options. Freedom gives you space. But space can feel uncomfortable if you're not used to it, because without pressure, you lose a certain structure, a certain rhythm, a certain identity, and that's where people feel lost. Not because something is wrong, but because something has changed. Now here's the truth that completes this journey. Money solves financial problems, but it does not define purpose. Let that sit with you, because this is where everything becomes deeper than money. Now imagine this. Your system is running, your investments are growing, your life is stable, but you wake up one day and realize you don't need to chase anymore. You don't need to rush. You don't need to prove anything. And suddenly, you have space, time, choice. And that's when the real question begins. What do I want to build now? Because when survival is no longer the goal, creation becomes the focus. Now let's explore that. For years, you've been building financial stability. Now you have the opportunity to build meaning, to build impact, to build a life aligned with who you truly are, not who you needed to be to survive, but who you choose to be when you're free. Now here's where many people struggle. They confuse freedom with doing nothing, but doing nothing does not create fulfillment. Purpose does, growth does, contribution does. So freedom is not the end, it's the beginning of a new phase. Now let's go deeper. What gives life meaning? When money is no longer the main focus, it's not a single answer, it's personal. For some, it's creating, building something meaningful. For others, it's contributing, helping others grow. For others, it's exploring, learning, experiencing life without restriction. But here's the key. You must define what matters before freedom arrives. Because if you don't, you'll reach that point and feel uncertain, not because you lack options, but because you lack direction. Now pause. Ask yourself, if money was no longer a concern, how would I spend my time? Not hypothetically, honestly, because that answer is your direction. Now let's connect this back to your system. Because your system doesn't just build wealth, it creates space. And what you do with that space defines your life. So the goal is not just financial independence, it's intentional living. Now here's the deeper truth. Freedom without purpose feels empty, but freedom with direction feels powerful. Because direction gives meaning to your actions. It gives structure to your time. It gives clarity to your decisions. Now imagine this. You wake up, not because you have to, but because you choose to. You work, not out of necessity, but out of intention. Now before we close, make one quiet commitment, not to me, not to anyone else, to yourself. A simple one. I will build a system and I will stay with it. That's it. No pressure, no perfection, just commitment. Now, if something in this audiobook resonated with you, if a line stayed with you, if a shift happened in your thinking, take a moment, acknowledge it. And if you want to go one step further, leave a comment sharing the one idea that changed your perspective, not for us, but to make it real for you. And if you know someone who feels stuck, someone who is chasing money without direction, share this with them. Because sometimes one idea at the right moment changes everything. And if you're ready to stay consistent, to keep learning, to keep building, subscribe, not as a click, but as a commitment to your future self. Now, this is where we end, but this is also where you begin, because the system is simple, the path is clear, and the only question that remains is this: will you stay? Because if you do, everything you're looking for will meet you there.